Hey, it's Clay Trader, and this will be a video chart on ticker symbol OPXA. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like a few weeks worth of time, it's actually just the past 2 days broken down into 30-minute time slices. I like to this time frame. I think that does a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance easier to see. So the chart is at a very critical area, and that is for definitely those people that care about the long-term perspective of things, because from the long-term perspective, it's all about putting in higher lows. And case in point, let me just put a green line right here so I can better illustrate this. But this point right here at 96 cents, let's say that indeed does hold, and I'll explain in a second why that's important as enough, but let's say it does hold and it bounces, and then goes sideways. From the big picture perspective, you'd have a set of lows right here. The previous set of lows would be down here. If you picture each one of these as stair steps, well, hey, the stair steps are progressing in the upwards direction. Now, I'm emphasizing big picture perspective because I fully realize and acknowledge that if you're a day trader and you bought right there and you wanted to sell within 7 seconds, then yeah, for you the chart's terrible right now. But I'm talking about from the big picture perspective. So that's why I say, yeah, the bulls still have a chance to put in that higher low. But the sign of a fake move is the price going back to where it started. I'm assuming you're saying, hey, thanks, Captain Obvious. Of course, if a price goes back to where it started, then that wasn't a truly strong move. And that's what 96 cents is representing, because any sort of closes below it, or worse yet, if the price separates to the downside, at that point in time, that's literally putting the price right back within this range where it already was. And on top of that, I made a comment about why this green line is important. You look at the two famous moving averages, purple line being the 50 period, pink line being the 200 period. Even if you just have a surface deep understanding of charts, I'm sure you've heard of the 50 period and 200 period moving averages, and you can see it's kind of like a triple whammy right now. Everything is sitting right there at 96 cents, and that's right where the price closed. So going into next week, 96 cents, definitely a very important level of support. Now, in the event the price does start to bounce and head back up, where some of these levels of resistance at? First key level to keep an eye on is going to be $1.03, and then after $1.03, next key level up there at the $1.15 mark. But there shouldn't be any talks about this portion of the chart as it stands right now until the price can first off just stabilize. That's priority number one, and then get above these levels of resistance, and then you can start to talk about that range of the chart. But as it stands right now, very, very interesting spot, very important spot. So we'll see how the bulls carry through next week. One of the most popular questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good weekend.